Hi, welcome to Global Investor Radio. Just a quick update on some of the Asian indexes I checked out last night around 1:30 a.m. UK time on the 11th of December. The first one here is the Singapore index, the MSCI share, and you can see here it's been in a bear market really since the back end of 2007, and if you look where it came up to, it fell off with gold and commodities, but it hasn't had as severe a drop as many markets around the world. And you can see here where it came down, where my mouse is, you've got a little head and shoulders and then the shakeout here. If you draw a line from where my mouse is straight down, it cuts that mini downtrend with this particular action here. What I like to do, if you look where my mouse is, if you draw a line from my mouse to the top of this action here and draw a line here, when the market goes over that, it will be a pretty good sign, a bullish sign that the market's going higher. And I would use this point here where my mouse is at 12 as the pivotal point, and you can clearly see how pivotal that is. And if you draw a line along here as well, you've still got the uptrend. If you look where my mouse is, a line here going up to here, the uptrend is still in effect for the Singapore MSCI index, but at the moment it's one of those markets where I wouldn't be trading it. I would wait for confirmation action, and you could also as well draw a line from the top across here, and once it breaks that, then I would say that the market's pretty bullish and would rise higher, but until it does that, it's not worth going in there. It's better just to wait and see what happens at these levels. Singapore should do quite well over the years because it's like a offshore tax haven for Indonesia, Thailand, Malaysia, and other jurisdictions in Southeast Asia as well. A lot of people now are moving their money. I would say it's probably somewhere like the 1980s when you compare it to European and American use of tax havens. So the big crackdown from Southeast Asian governments to look into their own citizens' affairs probably won't happen for another 15 odd years, 20 years. So Singapore will see a lot of action from business people in the Southeast Asian region and the Asia region as a whole. So overall it should do quite well over the next 5 to 10 years, but one has to take into account price confirmation here and use these points of interest that I've pointed out. And this is the daily 1 year chart, just to zoom in on where I said would be a good signal. If you draw a line from here down to here, you can see if it breaks above that the second time, that usually is a very strong sign that the market's going to continue higher. But again, if it breaks below the pivotal point here and here, that's why I wouldn't trade this market at the moment. It's in an in-between area. The Brazilian market been in a bear market since 2007, never really recovered, well 2008 really. And if you look here at the stages, it had a huge rise up from 5 all the way up to over 100 on a percentage scale. That's absolutely huge, and it just shows you the type of enthusiasm that can be generated with bubbles. And also with markets like Brazil, it's a lot easier to put out information to pump it because it's a lot more opaque compared to, say, a mature market like the American market, where people measure statistics and they've got a better handle of what's going on. And these are why these markets get pumped up so highly, but you can clearly see the distribution here and the final spike up, and then the huge crash down, and then you've got a long bear trend really from 2011, the end of what we would term the main commodity bull market, and you can see it's broken it once here with this move. Again, I wouldn't look to touch this till I'd seen some slowing down action and some flatline action, and also I would use where my mouse is here to here and draw a line, and if it broke above that and started popping up above 55 again, that would be a pretty good signal. But there's nothing the government's doing at the moment to sort out the regulation burdens and the opaque nature of the Brazilian economy, but it is a country with huge potential, and it's something you should watch very closely for bottoming action, because one day soon it will have a very powerful bull market again. But how long away that is, I'm not too sure. But at the moment, I wouldn't say it was the right time to buy at all, and it's something just to wait and watch price action. But you definitely should put it on your watch list, because sometime in the near future, it may take 2 or 3 years, it may take 5, but sometime in the very near future, this market will be a good trade to get into as a long-term position trader. And if we just go back to this bull market that began in 2003, really with other commodity markets like copper and the agricultural markets in some respect, you can see here the benefit it gave to the Brazilian economy. And somewhere to compare this to the Dow market at the moment, I would possibly say that we could be here, or maybe even at this downward point here where it goes back up again. But I would say, just on a rough guess, I would say we were about this location for the bull market in America at the moment. So one day it will come to an end. I made a prediction about a month and a bit ago about the Dow going to 19,500, well, up towards that direction, and I was awaiting price confirmation. Nothing I've seen in the last month has changed my mind, even the last mini shakeout of the last couple of days. Again, I would need to see more price confirmation. I wouldn't be panicking and looking to short the Dow just yet. I think next year, sometime between May and October, will be the peak of the market for this particular cycle. But this is the type of action we're looking at in terms of distribution, where my mouse is here, to identify when to sell out of these types of markets that are in good bull market moves. The Russia capped index, and you can see here I gave a couple of screencasts back in May and June because I saw some touting by the media about how much value there was in the Russian market, and trying to entice people into funds, value funds that invest in Russia, and I advised you all to stay well away from it. And as you can see, I think it was about here, the market had a brief spike up to entice people back into Russia, and again I was right to be extremely cautious here, and it's been in a solid downtrend ever since, and the ruble, I believe, has just made a new low today as well. So nothing I've seen has changed my opinion on Russia for the foreseeable future, and I would stay well away from any Russian shares or the market. But if you want to go back and listen, in May and June and April, I did quite a few screencasts advising clients, people that trade the market, to avoid the Russian market at all costs, and that has proved to be correct. Power shares in China, I just wanted to show this brief small pattern where we have the stages of an accumulation, a consolidation, the markup, potentially distribution, or a consolidation area building here. But you can see these big volume spurts here. When the market was going down, a lot of professionals bought in, held the market started flatlining again. There was a lot of negativity, and professionals bought in and held the market. These two big volume spikes here could signify that they're distributing the holdings, and this was just what we call a mini play. It isn't a long-term play because of the length of the accumulation in the market. Of course, this is only an ETF and only shows a brief picture of what the actual action has been over the last few years, and this is just a small picture over the last year. But you can see these mini types of plays where you've got the downtrend, the accumulation, the consolidation, the markup, and then potentially the distribution here. But there's been lots of money to be made in different markets around the world, so it's been a good year, 2014. And this is the Japan hedged equity. It's just basically mirrors the Japanese stock market, and you can see the severe bear market coming roughly to an end. Okay, it's all based on money printing really, and the devaluating of their currency, but you can see the type of power they've generated in the upward move by doing that. Will it last forever? Of course it won't, but trying to pick the top is almost impossible without price confirmation distribution. So at the moment it does look to be in somewhat of a markup phase, and if I'm right about the American market having roughly around 6 months to 8 months left in its bull move, then potentially Japan could mirror the American market. The economy hasn't been doing too well over there, but again, devaluing the currency and printing a lot of money can boost the stock market. So look out for a good consolidation area, and if it does build up the consolidation area and develops into a nice picture, this could be a good move to go higher. But again, it's at the area where I wouldn't be buying more, I'd just be holding what I had and then looking perhaps to buy a little bit more if it does indeed break out. And it could easily drop back down to 52. I think if it dropped any lower than 52, I would be slightly concerned that the move was over. But I don't see that happening just yet. Again, I'd need price confirmation, and to me it looks like it's developing a consolidation level around where my mouse is, 52 perhaps to 57, and then over the next 6 to 8 months, if I'm right about the American market and the price action doesn't change, then we could see quite a significant move in the Japanese market as well. Okay, that's it for now. There'll be an update coming on the Dow Jones and the Chinese market towards Christmas, and there are some points there that I wanted to bring up and to talk about as well. Okay, that's it for now. Over and out, and I'll speak to you soon. Bye bye.